Good Monday morning. Futures are down with 30 minutes to go until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming off a rush for trade deals, the Trump administration signals August 1st is the start date for higher tariffs if you don't agree to a better deal by Wednesday. Meanwhile, the feud between President Trump and Elon Musk escalates as the Tesla CEO moves to form a new political party that could even back another presidential candidate. And Wall Street reacts. William Blair downgrades Tesla, saying investors are growing tired of the distraction. Analyst Jed Dorsheimer joins Open Interest this hour.
Let's take a look at the reaction in the market right now, because the stock slumping as Elon Musk dives back into politics. You also had Wedbush analyst Dan Ives calling Musk's move exactly the opposite of what investors want. And you take a look at the shares down 6.4% pre-market. This stock was already down about 22% year to date heading into Thursday's close.
We'll see if more analysts downgrade the stock, because even if it's exactly the opposite, I don't think Dan Ives has Tesla as a sell right now. Coreweave is off after confirming an all-stock transaction to buy Core Scientific for $9 billion. And obviously, if it's an all-stock deal, you're going to see a red arrow on the acquirer. It is, however, interesting and questionable why you see Core Scientific down 17% on this deal. Katie?
To that soon, but let's turn back to this morning's top story, and that is that countries around the world are working to reach trade deals with the U.S. ahead of this Wednesday's tariff deadline. President Trump sounding optimistic on negotiations that continued over the holiday weekend.
I think we'll have most countries done by July 9th, yeah. Either a letter or a deal.
But they go into effect on August 1st. Tariffs go into effect August 1st, but the president is setting the rates and the deals right now.
For more on the tariffs and the talks, we're joined by Bloomberg senior economics writer Sean Donnan in Washington, D.C. So they're kind of rearranging the goalposts here, Sean, but I guess the message is the same. If you don't have an agreement with the president, who's just won a huge victory with the big, beautiful bill and has stock markets at an all-time high, he's going to put some big tariffs on you August 1st.
Look, it's another Monday morning in America, and lots more questions about where trade policy is heading, right? We have had this indication from the president that by noon today there will be letters going out. There may be some deals announced. That seems like it will give us some clarity, at least. But we should remember that we've been here before. For weeks now, the administration has been saying that deals are imminent, that they will be announcing them in the next week or two, and we've been waiting and seeing. We've really only seen one kind of firm deal with the UK, a ceasefire with China, and a deal that was announced on social media by the president with Vietnam that the Vietnamese followed up by saying they still have some talking to do. So, lots of questions. The next few days are going to be interesting.
Absolutely. I'm sure they'll be keeping us all busy. That is Bloomberg's Sean Donnan with the latest. And tariffs, not the only trending topic in Washington this Monday morning. Tesla CEO Elon Musk tweeting over the weekend that he will be starting a third political party, the America Party. President Trump reacting to the news yesterday.
It's always been a two-party system, and I think starting a third party just adds to confusion. It really seems to have been developed for two parties. Third parties have never worked. So he can have fun with it, but I think it's ridiculous.
We head to the White House for more now with Bloomberg Washington correspondent Tyler Kendall. Tyler, you can see Tesla shares down mightily. Let's just talk about the America Party. We'll note, of course, that no paperwork has been filed with the FEC. But what do we know about what Musk is trying to accomplish here?
Right, exactly, Katie. This really is just the latest sort of twist intensifying what has been a mounting feud between, of course, the two former allies. Now, you said it there, we kind of sparse on details. He hasn't formally filed the paperwork that would be required to do so, but it has been interesting to see how Musk has sort of painted some of his goals as being going after some key House and Senate seats as sort of the directive, the mission here, considering that Congress has such slim margins. He feels that that could really help affect legislation going forward. And I can tell you that we pulled the stats. There are 33 seats up for re-election in 2026 when it comes to the Senate. 13 of those are Democrats, 20 are Republicans. So Republicans are going to be much more on the defense going into the 2026 midterm cycle. And perhaps that could be part of why we see this White House really come out and criticize Elon Musk over the decision. President Trump there, you heard him saying that Elon Musk has gone off the rails. So we're still waiting, of course, for some additional details going forward. But it was interesting, Katie and Matt, to see when Elon Musk did announce this, because he did tie it directly to legislation. Of course, he has been blasting the one big beautiful bill, and his announcement was one day after President Trump signed that reconciliation package into law.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there talking about the deepening rift between Elon Musk and President Trump. Tesla shares, meanwhile, are plunging pre-market as Musk continues to focus on politics and not necessarily his EV company. Wedbush analyst Dan Ives joined Bloomberg earlier, voicing his concern.
I believe you've now hit a point. I think the board's going to have to get involved because this is now over. I think there's a line in the sand that he's now starting to cross. And that's the frustration. As someone that's a huge supporter of Tesla, autonomous, the golden age ahead, you cannot kind of go down this path.
For more on the stock reaction, we're joined by Bloomberg Tech co-host Carolyn Hyde. And it would be remiss if we didn't at least comment on his shirt and jacket. I know it's a waste of time, but like you can't go from that clip.
You're not numb to it yet?
I love it.
Either of those pieces in isolation would probably be okay, but together,
I love it.
We talk about your fashion just as much, don't you, Why?
Thank you. All right, let's get back to Tesla, because Elon Musk promised us, right, Michelle Hussein, in a face-to-face interview or screen-to-face interview that he was done with political spending.
And yet, we see the market sell off because this is exactly the opposite of what the Tesla investor wants right now. We've got William Blair analysts going as far as to actually downgrade the stock on the back of this, because this comes in a whole wall of worry when it comes to Tesla. Yes, you're worried about the distraction, worried about the focus now on politics rather than robo-taxi rollout. But at the same time, China, we're seeing competition just ramp up ever further there. You've got the headwinds of the fact that the sales picture is ugly, particularly in Europe. And just remind ourselves, last week it was a 13% collapse in their quarterly sales. And so all of this just adds to the fact that they wanted refocus from the CEO. And instead, you're getting someone who's getting ever more involved in politics. There is, though, one particular analyst who's been calling out that maybe this is a good thing. He's based over in Hong Kong, and his name is Jason Su. He's from Radiant Global Advisors. He thinks this is a great idea and ultimately thinks this is the only way that if you've already managed to completely blow it up with the current administration, lose all of your favor with President Trump, maybe you do need to start picking out certain areas of political strength that the president currently has and fight back that way. But he's one voice. Everyone else is saying this is a disaster, you shouldn't be doing it, and the board should get involved. James Fishback as well, who is going to be setting up a new ETF all about Elon Musk, has pulled that deal and is saying he's already written to Robin, who of course is the head of the board.
There you go. I want to go back to that Radiant call, though. Swimming against the tide, as you highlight, but it does play into the idea that it's not just a distracted CEO that Tesla is facing. It's all of this policy risk, too, emanating from the big, beautiful bill. I would assume, though, it's sort of a long-term, really long-term call that eventually maybe the America Party will be able to get more friendly politicians in these seats.
And in the here and now, you have William Blair analysts saying that this is why we're downgrading our stock view. It's because just look at what the big, beautiful bill means. Yes, you take away the consumer tax credit of $7,500, but it's not just there that's the issue. It's the regulatory credits, the money that they would make because other car companies would be fined if they didn't live up to certain climate targets.
Oh, you're just talking about the car business. I didn't know you were just talking about the car business. That's such a tiny part of what Tesla really is, right? The company is worth, again, more than $1 trillion. So even if it's plunging today, it still has climbed back up from the depths of last week.
And that's actually what's really notable. It hasn't sold off as hard as it did with the first big fallout with President Trump at the beginning of June. So actually, we got more depths to plumb. Most analysts out there are now saying that the price target by the end of 12 months is going to be lower than it is currently today. And we've got about, what, 13 overall sell ratings on the stock?
13 out of 61, yeah.
But, I mean, to the point, we had our editor-in-chief emeritus telling us all about how ultimately, remind ourselves, Tesla is still worth more than all the other car companies combined.
Much
but
more.
the future is AI.
Intimately aware of that.
But the future is AI, it's Optimus, and it's humanoid robots.
Right.
How are you going to get there if the regulatory landscape suddenly shifts away from you? He wants the support from the administration, not blowing it up. But at the moment, if you're an investor, you're having to bite pretty hard.
I will say, maybe the business, the EV business, it's not a small part of the business, it's a small part of the market cap, though.
It's a small part of the stock story, right? Because, to your point, every single car maker in the entire world, including, Ferrari, is worth far less added together than the market cap of Tesla. So this stock story is about humanoid robots. It's about somehow taxis. I don't get that.
And
but
it's about betting on Elon. It's about betting on Elon. Are you going to bet that he can win the political story as well as the business and entrepreneurial story? That's a key question.
All right, we look forward to the coverage on your program. Caroline Hyde co-hosts Bloomberg Tech. That kicks off at 11 a.m., one you don't want to miss. Coming up, William Blair downgrades Tesla. We'll speak to the analyst, Jed Dorsheimer, the group's head of the energy and power technology sector next. This is Open Interest. At least 82 people have been killed and dozens are missing, including 27 girls who attended Mystic Summer Camp after catastrophic flooding in Kerrville, Texas, left officials struggling to explain whether they did enough to warn people of the waters or if they rose simply too quickly. The area remains at risk of further inundation as thunderstorms move through west central Texas, and we'll keep you apprised of this story throughout the program. Apple is appealing a $580 million fine from the EU, calling it unprecedented. The European Commission said that the fine was due to Apple's anti-steering policies, and the amount of the fine was determined by the gravity and duration of Apple's non-compliance. You can see the shares moving slightly lower in the pre-market. And William Blair has downgraded Tesla shares to a market perform, thanks to headwinds stemming from President Trump's big, beautiful bill and the fallout from Elon Musk's politics bid. Analyst Jed Dorsheimer writes, quote, investors are growing tired of the distraction at a point when the business needs Musk's attention the most. Katie?
Joining us now, I'm pleased to say we have the analyst behind that call, Jed Dorsheimer. He is William Blair Group, head of energy and power technologies. Great to have you with us, Jed. As I see it, there's two big headwinds here. You have a distracted CEO, and then you have very real policy concerns when it comes to the big, beautiful bill. You write recently that the big, beautiful bill might be too much for Tesla shares. Tell us why.
Thanks, Katie. By the way, first off, you're catching me at the end of vacation, so I feel inferior looking at Dan Ives' jacket.
You look great.
To upgrade my wardrobe. So, listen, I think you've got two things going on. As you guys said in the previous segment, there's not a lot of focus on the core auto side of the business, even though it is the vast majority. And I think we have previously talked about the focus on robotaxi and humanoid robots and see these longer term opportunities. What has changed, though, is while the $7,500 tax credit was well known, telegraphed, probably in the market already, the regulatory CAFE fine reduction was not. And that is about $2.8 billion of profits for Tesla. So what investors are going to have to do is they're going to have to hold their nose and stomach more margin hits and a reset of street models, in our opinion, lower to accommodate sort of getting to that promised land of these newer opportunities like robotaxi or humanoid robots, et cetera. And we think that that's just too difficult with a 1-2 punch between the $7,500 tax credit and the CAFE or the basically taking those EV credits to zero.
Jed, let me first say that I, too, am a big fan of Tommy Bahama. And secondly, ask how much of this, trillion-dollar company is the car business? I mean, do you look at it that way? Because as we talk about all the time, the valuation is just insane for a car maker or almost any other company on the planet. So how much of the car business matters?
Yeah, so let me frame it in terms of shares, just so that viewers might be able to get a better handle. I think, if you took a look at back of the envelope, sort of sum of the parts, using a 10 times EV to sales on just the auto business gets you about $40 to $50 per share. On the energy business, probably another $30 per share. And so that means the remaining value would be on these other robo-taxi, robots, potential for value in terms of dojo, et cetera. All of that non-auto side. So, I think let me maybe jump to what the next logical question would be. So if the auto business goes from a 50 to a 40, not a big move in terms of the shares, but it's going to test the patience, in our opinion, of investors, because you won't see robotaxi really scale and kick in by our estimates until 28.
Yeah, and you can see that patience being tested this morning with shares down 6.7% pre-market. I don't actually think we've talked about Dan Ives' wardrobe enough, so let's actually take a listen to what he had to say on Bloomberg TV earlier this morning.
I believe you've now hit a point. I think the board's going to have to get involved because this is now over. I think there's a line in the sand that he's now starting to cross. And that's the frustration. As someone that's a huge supporter of Tesla, autonomous, the golden age ahead, you cannot kind of go down this path.
I thought that was interesting, Jed, to bring the board into this. Do you share that opinion?
I don't. And the reason being is, Elon has supermajority voting rights of Tesla. Your shares, it's not like we're talking about the shares being $100 per share. I mean, it's $294 per share. So, despite, what seems like a lot of pressure recently in terms of off of the high, you're still at 3 times where your low has been. So I just don't see, the board coming. And it's also, with Elon, it's a little bit of a double-edged sword where, I would argue what people are paying for is his ability to innovate. Elon Musk is one of the great innovators of our modern day. So taking him out, does the board really, would they really want that? And I think, when you kind of ask that difficult question, I just don't see them stepping in at this stage. But I'm not privy to that right now. But I would not share that opinion.
What do you think are the problems here with a sell rating? Only 13 analysts of 61 have had the, courage to go there because shorting this stock has been a fool's errand, right? I mean, ask Jim Chanos and he'll just tell you about the times he's been burned and he's not willing to do it again.
I mean, I've been around this stock for, about 15 years. And yeah, you're right. I mean, it is, I wish I had $1 for everybody that would tell me that it was a great short. And it has not worked out that way. That being said, we need to focus on the fundamentals. And I think the fundamentals associated with this bill definitely take some of the luster off this right now. And for our clients, we'd rather wait for a better opportunity to get more bullish or to see, I think we're kind of in an in-between where the signals aren't as great right now, but, there wasn't enough for us to defend it either.
Well, when it comes to the fundamentals, policy headwinds aside, what does the demand picture look like when you think about the American appetite for EVs right now?
Well, it's going to get worse. I mean, you actually near term, it's going to get better because your expiration of the $7,500 is going to expire at the end of Q3. So we actually suspect that there will be a boost in the very near term in terms of demand. However, as that rolls off, the vehicles are either going to get more expensive or the margins are going to get worse. So, as we look out, say 2 years, 3 years, really until you get robotaxi that comes on and the data points to suggest the scaling of that, it's going to be it's going to be noisy in terms of the signals versus noise.
Jed, smart analysis. Really appreciate you joining us from your vacation. When you come back, we hope to get you here in studio. Jed Dorsheimer there of William Blair, which has now initiated a sell rating on Tesla. Coming up next hour, we discuss Elon Musk's third-party pitch with political historian Wendy Schiller of Brown University. Have third parties been successful? Even if they haven't taken power, do they manage to sway the vote? We'll talk about that with Wendy. This is Open Interest.
Welcome back to Open Interest. Here's your setup on this Monday morning. Red on the screen, the S&P 500 down about 0.4%. Big tech even more. I would say 0.4% on the S&P 500 might look resilient when you consider the fact that Tesla shares are down more than 7% pre-market. But it's the small guys that are getting beat up the most, with the Russell 2000 down about 0.7% to start the week, Matt Miller.
That's tough for the small caps.
Yeah.
I guess we had rates come back up at the end of last week. Right now we're looking at a little bit of a gain, 436, 437 on the 10-year. We have, though, really, I think, after the passage of the big, beautiful bill, a signal that Republicans are going to do whatever Donald Trump wants them to do. And he's free now to put even higher tariffs on our trading partners.
You know who is not doing whatever Donald Trump wants is Elon Musk. That ties into Tesla, which we're going to talk about even more. We're going to get into Coreweave as well and Core Scientific. A lot more coming up, including the opening bell. And coming up next, we'll walk you through the action with Lori Calvasina of RBC next. This is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are lower this morning. S&P futures off about 1/3% from an all-time high, of course. NASDAQ futures down a little bit more, 0.5%. So tech stocks losing more. That could be explained by the drop that we see in Tesla today. And then the small caps off by 0.7%. You hear the bell at the New York Stock Exchange. It's being rung by Carly Kloss, who is apparently a supermodel that started this organization, Code with Klossy, for girls or gender expansive youth 10 years ago. It's going to be about as important a skill as weaving pretty soon, now that AI is out, right? Waiton Financial Limited ringing about the New York Stock Exchange. And those shares are actually up 40% from their IPO, which I believe was in April at $4 a piece. But the most important takeaway from this is that their ticker is WTF. Why the face?
Why the face? That's exactly what that stands for. Let's talk about Tesla shares right now. Really slumping. That's after Elon Musk is diving back into politics with the new formation of a new U.S. political party. William Blair downgraded the stock to market perform in the wake of the news and the passage of the Trump tax bill. You add it all together, Tesla shares down about 6.6% at the opening bell. Its year-to-date losses, Matt Miller, now pretty close to 30% on the year.
Right. Still worth over $1 trillion in market cap. Well, actually, you know what? Why don't I check the actual...
There you go.
Nope. 941 billion only. So once again, Tesla falls out of the 4 comma club. Coreweave is buying data center operator Core Scientific. It's a deal that we've been following for at least a year. Right? The Wall Street Journal reported at the end of June that they were interested in Core Scientific. They attempted to buy Core Scientific for $1 billion.
$1 billion.
How many years ago was that?
That was sometime in 2024, I believe.
Oh, so 1 year ago.
Yeah.
And now $9 billion. I guess that's a lesson if you're a seller.
Just wait it out.
Wait. And for some reason, Core Scientific shares are down
Yeah, we're going to get into that.
That doesn't make much sense at all. So we will continue to follow that story for you. Last quarter, dozens of companies halted guidance due to macroeconomic uncertainty. Now Goldman Sachs expects companies to restart guidance as tariff levels come into focus. Here's head of asset allocation research, Christian Müller-Glissmann.
In that earnings season starting July 15th, we will get companies potentially reporting first impacts, but more importantly, give guidance. And we'll learn if this is a relative value story, where there's a few specific companies are impacted, or if it's an S&P, if it's a beta story. And I think that's what we need to understand, because if you look at the implied correlation, like how the market prices volatility in the earnings season, is it micro or macro? The implied correlation that's priced is very low. So the market actually thinks it's going to be a micro story that's very specific companies, but it's not going to be a big macro factor.
Let's bring in RBC Capital Markets head of U.S. equity strategy, Lori Calvasina. Lori, what do you think about what we're going to see from Donald Trump? They've now sort of pushed the what do you call the forks? The field goal, the goalposts back to August 1st. But it does look like Trump is free to do a little bit more of what he wants, since he's done so well with the big, beautiful bill and the stock market.
Yeah, look, as I've talked to investors, kind of late June, the first couple days of July, I don't want to say complacency, because that's not the right word, but I think investors had really in their minds kind of moved on beyond tariffs. And so I was hearing things like, I had one investor say to me, tariffs are deflationary. That was not the sort of base case, but I heard a number of people say, look, tariffs aren't showing up in the inflation data. Their companies are not passing this on. They're figuring it out. And, my colleagues and I at RBC, we've all along thought that the impacts of tariffs were going to be felt a little bit later on. And, there's sort of a really interesting inventory debate out there. How much pre-tariff inventory are companies sitting on? When are they going to run through that? I really hope, I read earnings call transcripts. I unfortunately can't get on the earnings calls, but I do hope the analyst community will really push companies on that, because that was a big talking point. And, it may be giving some investors a false sense of security. Maybe they do have, inventory that can just last forever and, get them through it. I kind of doubt it.
Well, what if they have very fat margins, Lori?
Well, have you ever known investors to like margins going from being great to a little less great? That's not been my experience on 25 years on Wall Street. And, the point is somebody's going to have to pay the tariffs. Is it going to be the companies absorbing it through margins, and then, earnings are not as hot as they could have been? Or are you going to see it show up in inflation, potentially reverberate in consumer spending? Investors, I think, have really just kind of talked themselves into the idea that there aren't going to be any potholes or ramifications from these tariffs. Mm-hmm. And one thing we also hear is that investors are really getting bulled up on 2026. And a lot of that has been from the tax bill and the bonus depreciation and CapEx. But, if there are some inflationary impacts that get pushed into next year, if there is some pull forward of demand that either pulls forward from the second half of this year or next year, I don't think investors are thinking about those kinds of things either, to be honest.
Well, the thing is, when it comes to inflation, we were talking to Stephen Myron last week. He made the same point that you really haven't seen sort of the inflationary impacts that were warned about from tariffs show up in the official data. You also haven't really seen it in the labor market. I mean, we had obviously the rate of change is coming down, but still a very strong showing when it comes to the June payrolls report. So, in some senses, you could see how some of these investors are looking at the data. They're looking at what corporate America is saying and putting it all together and saying, this looks pretty bullish right now.
Yeah, what we saw in the last reporting season is companies finally, after months of not really saying anything or even acknowledging the possibility of broad-based tariffs, finally started to talk about it. But we also saw a number of companies saying, look, this was far beyond our expectations. So I think there was a little bit of shock, and there was a little bit of, kind of get your messaging together. So we had a lot of conversations about mitigation, inventories, pricing, those sorts of things, but there weren't a ton of specifics. And as you guys mentioned at the top of this segment, right, a lot of companies did pull guidance. We need to get some more specifics in terms of how companies are thinking about this stuff. And frankly, they've had 3 months to do it. Mm-hmm. So I do think they owe Wall Street a little bit more specificity.
Do you think that we're going to see the U.S. continue to rally like this? Because we've seen Europe do so much better, and now it seems like some of the shackles of uncertainty are lifted, right? So
we're going to have to hear from the companies. Has it been enough of a lifting of uncertainty to let them proceed with things like CapEx? I have noticed that cost containment has crept up in the corporate earnings transcripts in recent months. So we'll see, frankly, where their heads are at. But if we think about sort of U.S. versus Europe, we had this moment, I think it was kind of back in March, where you really did see this kind of push in the money flows out of the U.S. and into Europe. Now, that had come off of very peakish inflows into the U.S. back last fall. So I think regardless of what the news flow had been, you were going to get some reversion. But the other thing that we saw when people were really kind of moving out of the U.S. and into Europe was European GDP forecasts were moving up. Economic surprises were turning positive. There was real excitement over Germany and what was going on in that economy in particular. So it wasn't just anti-U.S., it was genuine excitement over Europe. And as I talk to global investors, it feels like that latter part of the story has faded. And now I'm starting to hear a lot about, well, the U.S. still has the best productivity story in the world through AI, and we have to counterbalance that with some of these things we've been, sort of concerned about in the past. So it feels like a much more kind of balanced, nuanced look at the U.S. right now.
Yeah, absolutely. And I will say it is remarkable at this point in the year to see that outperformance be sustained, because it was a much different narrative when you think back to January, February, March. I do want to get your opinion on what's going on with small caps, because as measured by the Russell 2000, we haven't seen an all-time high for that index since 2021. It feels like we can't quite get the story straight. How are you viewing the little guys?
We have a chart that we watch in our weekly every week, and I will confess, I put the weekly out a couple days early so I could take Thursday off.
There you go.
And so my chart is as of Wednesday. But basically what we've seen in small relative to large is really more of a stabilization of performance. And you have a good day every now and then people get really excited and say, small caps finally breaking out. Well, a couple things you need for small caps to break out is, one, you need real economic excitement. Maybe some of that's coming back from tax. We'll have to see. But generally, you want GDP above kind of 2.5%, like 1 to 1.5%, 2% isn't going to cut it. The other thing you want to see are things like some of these sentiment indicators like ISM move up. We haven't seen that yet either. So you can watch for some of those short-term indicators. But honestly, the thing I'm wondering about this morning, what I'm hearing is that after the NFP print, we've started to see rate cut expectations dialed down.
Yeah.
And that is really a big trigger, I would say, the last couple years for getting the fast money crowd to make these short-term small cap bets. And so the last couple weeks when I've been hearing these murmurings about small caps, is it finally time to get in? We've had a bunch of strategists around the street try to make these bullish calls. It's been in the backdrop of seeing those cut expectations getting dialed up. And now that we're dialing them down, even if it is because the economy is good, that takes away a catalyst from the fast money crowd.
It's a great reminder. You think about an area of the market that really needs rate cuts. It's the small caps. Lori?
And look, I would say the broader market, too. We've seen in recent years when those rate cut expectations are getting dialed up, the S&P gets goosed as well. It's not just the small caps.
Absolutely. Lori, great to see you. Great to kick off this week with you. That is Lori Calvasina of RBC. Let's get a check on what this market is doing. We're about 10 minutes out from the opening bell, and you can see we're about 0.4% lower when it comes to the S&P 500. We've had 2 straight weeks of gains, so maybe a little bit of that momentum coming out of the market. You look at what is doing well. Up top is Uber actually getting a price target upgrade from Wells Fargo, helping out shares, General Electric, AbbVie as well. The downside is more interesting this morning, in my opinion, because right at the top, as you expected, you have Tesla down almost 8% when it comes to percent-wise, taking 8 points off the index, definitely the biggest weight right now. But then you also have NVIDIA down a little bit. That certainly isn't helping Eli Lilly and Oracle as well. This is the individual picture. Let's take a look at the sector look as well, because you do have more red than green. You do have some bright spots in the market, as we just highlighted. Industrials, maybe. Utilities, maybe. But look at these moves. They're tiny. It's more interesting on the downside. As I said, you can see communication services, materials, and then consumer discretionary shaving 1.3% off the index right now, Matt.
Yeah, right. Interesting trade today. It looks pretty bearish, although it's important to remember that we came from all-time highs and just continued to make new highs almost day after day last week. Coming up, Tesla shares are slamming on the brakes, and the company is now worth less than $1 trillion as Elon Musk makes another play into the world of politics, which he had promised not to do. This is Open Interest.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, we have Wells Fargo getting double downgraded over at Raymond James. The firm remains bullish on growth, but says that earnings upside is already reflected in the valuation. Shares down only slightly this morning. Remember, they report next Tuesday. Next up, we have CrowdStrike getting cut over at Piper Sandler on limited upside. The analyst says that investors should not be adding shares right now, and in fact, they're getting offloaded to the tune of 2.4% on the downside. And we end with Goldman Sachs initiating coverage of MGM with a sell rating thanks to a volatile Las Vegas market. Caesars Entertainment, on the other hand, getting a buy rating, Matt Miller.
Yeah, I think that is a pretty fascinating call that MGM.
It's a bit of a pair trade, right?
Yeah, exactly.
Yeah.
That's the first thing I thought of when Jamie sent around those upgrades and downgrades. More bad news for Tesla shares. The stock is down as Elon Musk dives back into politics. His latest move fueling concerns from many analysts. A downgrade from William Blair. Analyst Jed Dorsheimer gave us his advice for investors earlier this hour.
So what investors are going to have to do is they're going to have to hold their nose and stomach more margin hits and a reset of street models, in our opinion, lower to accommodate sort of getting to that promised land of these newer opportunities like robo-taxi or humanoid robots, et cetera.
For more on Tesla's share reaction to the news, we are joined by Bloomberg's Max Chafkin, who isn't just a random dude sitting on the set with us, but actually hosts Elon Inc., the podcast, one of the co-hosts, I should say, of Elon Inc., the podcast about Elon and his businesses. This is especially interesting to me, Max, because Elon had an interview with Michelle Hussein about a month ago, I'd say, in which he said he's getting out of politics. It just hasn't paid off. It's done him no good, and it's over. Yeah, really memorable line. He said, "I think I've done enough," which I think everybody in the room, no matter what your political persuasion was, they laughed with, agreed with. You know what? He is not necessarily the most reliable guy, even when he's talking about himself. And I think when you looked at what he was doing around those comments, even, his continued political engagement, it was always somewhat questionable that he was actually going to go back to his companies 24/7. It's sort of hard to understand how you unpress the Trump button once you've pressed it. And I think he's actually found maybe the only way, which is to start what feels like now is going to be a long-running feud with the president of the United States, famously vindictive. This is really, really tough for Tesla investors. And I think you really, at this point, have to sort of squint to see any kind of political strategy as well for Elon Musk.
Well, that's the thing. When you think about Tesla, I mean, okay, it's under $1 trillion in market cap, but it's pretty dang close. But shares are down 28% year to date. We know this is the biggest source of Elon Musk's wealth. Is there a certain pain threshold where he actually is forced to step back from politics because it's too disruptive?
I mean, forced by who? By his own net worth? I think
by his own net worth.
I think that is not going to happen anytime soon. I mean, I think there's a question of maybe he will get tired of being made fun of on Twitter or the kind of emotional embarrassment or whatever, some kind of psychological causes. He's got a lot of money, and it's true that he doesn't have that he's not necessarily cash rich, that his companies are intertwined. But Tesla, as you say, is still worth a tremendous amount of money, especially relative to other car companies. I mean, it could fall a long way, I think, before Elon Musk changes tune. I think the question is, does the Tesla board, which Elon Musk has kind of controlled for much of his tenure as Tesla CEO, does the Tesla board try to do something to rein him in? And if they do, what would it be?
By the way, we have a viewer writing in saying if he drops to second richest, I reckon he calms down. Reckon because the viewer's clearly British.
Right. Unnamed viewer,
but
whoever you are.
Look, he's worth $361 billion. The second richest man is Mark Zuckerberg at $253. So he'd have to lose over $100 billion to get there. That doesn't seem likely. Why is Tesla worth so much when it's really his other companies like SpaceX or X? These are, the AI and the rocket companies are outside of the Tesla umbrella. Do investors lump those in when they're buying Tesla?
Well, it's hard to say because those other companies are all privately held. And so they're, the dynamics, the market dynamics are a little bit different. We did see, during Elon Musk's kind of honeymoon period with Donald Trump, when he was at Mar-a-Lago dancing, when he was like part of the family, and you had all these kind of Tesla investors writing these really optimistic kind of analyst notes about the way that somehow Trump was going to like magically legalize robo-taxis or something that was going to send Tesla's valuation soaring. You saw those other companies also raising money, also at inflated valuations. So I think there is a factor where Musk's success or his perceived success affects the performance of those other companies, but it's not necessarily direct. Now, I will say, SpaceX in particular, I mean, it's a defense contractor. Despite the growth of Starlink, it still really depends on that relationship with the U.S. government. So it is very vulnerable to these kind of political wins. I have to think that people at high levels of that company this is going to be something that they have to manage as well. I mean, that on the other hand, that company does have a strong chief operating officer in Gwen Shotwell. So maybe it has a little bit more resilience, maybe even a little bit of a buffer between Elon Musk's Twitter feed and the business operations.
All right, Max, we got to leave it there. Really looking forward to listening to the next episode of your podcast. That is Max Chapkin. And for more coverage of Elon Musk, be sure to listen to the weekly Elon Inc. podcast from Bloomberg Business Week. You can hear more from Max and more of our Bloomberg News reporters. Now, coming up, AI M&A. Jeez Louise, it's heating up. Coreweave has agreed to buy Core Scientific for roughly $9 billion. Details next. Welcome back to Open Interest. Core Scientific shares are down in a big way after Coreweave agreed to buy the data center operation for roughly $9 billion. Bloomberg's Leanna Baker, who leads our deals coverage, joins us now for more. And I want to start with why the target company, Core Scientific, is down 19%. You don't often see that.
Sure, but if you look at how the deal's structured, it's an all-stock deal, so it's hard for Core Scientific shareholders to understand what actually is the value of the deal. While it's $9 billion today, we don't know what it'll be tomorrow or when the deal closes. Coreweave is a very volatile stock. Since its IPO, it's up a lot, but we'll see where it ends up. But I think that is a reason for such a big spread.
Why has Coreweave been, seems like, consistently courting Core Scientific? Because last year they offered $1 billion. Wall Street Journal reported this deal was in talks last month. Now they're doing a $9 billion deal, or at least it was before their shares went down. Why are they so desperate to get Core Scientific?
These companies really know each other well, and Coreweave is actually Core Scientific's biggest customer. So they're, really, entwined. And for Coreweave, this is a way for them to save money down the road. There's $10 billion in future lease agreements between these companies that essentially, get cut with this deal. So it's really a way to, save money for Coreweave. And Core Scientific also has an interesting history. It went public through a SPAC, then it went bankrupt, then they held talks at $1 billion. Now it's $9 billion. So it's just a really fascinating story of two companies, finally deciding to get together after sort of a long courtship.
They also have very similar names, so we might as well just smush them together there. Talk to us about what this means for the landscape overall. AI M&A. I said it right this time. It feels like there's been a lot of it lately.
Anything related to AI is very hot right now, but it's sort of also the evolution of Bitcoin mining, because Core Scientific and Coreweave sort of used to be focused on that space, which, saw some swings, but now it's all about AI. Coreweave is a big partner for Microsoft. So if these hyperscalers want to have access to these GPUs from NVIDIA, they're going to rely on suppliers like Coreweave to make that happen.
We only have 30 seconds left, but Joe in the control room says the Yankees are a disaster.
They won yesterday, so I never thought they would win another game, but here they're back. So, you never know.
We're back.
They're doing a lot better than the Mets, even if they're below, even if they're underperforming them currently in the Subway Series, right?
The Blue Jays went ahead of them in their, conference, but we'll see. It's a long season.
All right, Leanna Baker is, she runs our M&A coverage, and she's also the resident Yankees supporter in the office. Coming up in the next hour, JPMorgan global market strategist Jordan Jackson sees an opportunity in small caps.
There we go.
We are 30 minutes into the trading day on the first day since President Trump signed his big, beautiful bill.
We sure are, and we're looking at an S&P 500 that is still down on the day. You do have a lot of sour sentiment out there, but a few big names that are causing some of this drop, aren't we?
Yeah, absolutely. Tesla being one of those stories. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Sonali Basak, and it's an interesting day. You're only seeing a slight rise in yields also, Matt, after the passing of that big, beautiful bill. But we'll talk about it because even though we're off the highs of January, we've been drifting higher since the beginning of last week.
Yeah, every single day it seems like we've gotten a new all-time high, closing at 62.79 on Thursday. Remember, it was a shortened trading week, but wow, this market has been on a tear.
We are back to the grind, though, and coming up, a rush for trade deals. The Trump team signals August 1st as the start date for higher tariffs ahead of a Wednesday deadline.
Meanwhile, the feud between President Trump and Elon Musk escalates as the Tesla CEO moves to form a new political party.
And meanwhile, the feud between President Trump and Elon Musk escalates as the Tesla CEO moves to form a new political party. You're laughing.
Because I just said literally exactly that. JPMorgan sees the economy, the U.S. economy, contracting in coming quarters, but falling short of a recession. A global market strategist, Jordan Jackson, says we expect the economy to slow in the second half as low consumer confidence and rising inflation eat away at real incomes, putting downward pressure on consumption growth but avoid recession. Jordan joins us now, and I got to ask first about the wealth effect here, Jordan. I mean, we continue to hit record highs on the S&P 500. That's got to make some consumers feel like they're doing well enough to make some key investments.
Sure, I think that's a very fair point. I always try to remind myself, right, that the top 40% of consumers drive 60% of the consumption growth. So when you think about the amount of wealth that's been created, whether it be in stock portfolios, whether it be in their real estate portfolios, that's having a real impact in terms of supporting consumer spending. But also on those lower income individuals, those that are very dependent on getting a paycheck every single Friday, we're still seeing this low firing, below hiring kind of environment. So very low unemployment rates. They're still, generating decent levels of income, real income. While we expect that to erode over the second half of 2025, it's actually been quite positive over the last, call it year and a half to 2 years. So that's been a very important tailwind for that part of the economy. But that wealth effect, I do think, is very important and does provide some stability and durability in the economy to be able to avoid a recession and keep growing over the course of the year. While, again, we do still expect a bit of a slowdown.
Jordan, another thing I'm wondering about also is how do you assess the impacts of the tariffs from here? You have the administration saying that there's no impact in terms of inflation, but then you have Apollo coming in with a note over the weekend making a good point about the dollar, that the decline in the dollar puts you at risk of importing inflation. How do you expect this to impact the economy given that these are still such uncertain deals?
Well, what we have seen is that historically it does take about 3 to 4 months for tariff increases to start to feed through into the inflation picture. And so we generally didn't expect, you had tariffs announced in April and May. We really didn't expect that to really start to feed through to the inflation numbers until now, July, August, right? So I do think over the next couple inflation prints, we will start to see that beginning to feed through. The dollar is obviously a key piece to that. But we expect inflation, again, it's going to be a slow burn, slow grind higher on the inflation front. We do think that we won't get a peak inflation rate till late third quarter, early fourth quarter, so it may be a little while. And this puts the Fed in a difficult position in that, obviously, we argue that the July cut is off the table, but September may be a live meeting, but our base case that they won't be able to move until December of this year.
So one of the surprises of last week, Jordan, was the labor report. Non-farm payrolls were up by far more than almost any economist in our survey had anticipated. 147,000 jobs added, and the unemployment rate actually fell. Everybody was looking for it to rise, and that may be a result, at least in part, of President Trump's immigration policy. How do you see the labor market playing out in 2025? If it doesn't break, why would the Fed cut at all?
That's a fair point. Well, if you look at the details of the unemployment report, what we saw was obviously a decline in the labor force participation rate. Okay, roughly half of the jobs were created by state and local governments. So you still saw a bit of a weakening, particularly in the private sector, looking through the payrolls numbers. So this is generally still a labor market that we think is cooling, not yet cold, right? Softening. And particularly the administration's hard line on immigration, that very well could put a limit, particularly obviously it's constraining labor supply, and that would put a limit on upward pressure that we get on the unemployment rate. We actually have a peak unemployment rate penciled in the fourth quarter between 4.5% to 5%, right? When you look at the long-term unemployment rate of around 6.5%, that's still arguably a very, very low level of unemployment. So we do think you get a modest upward push in the unemployment rate. This is generally an economy that's arguably adding about 50 to 100,000 payroll jobs per month. Again, that should put some modest upward pressure on the unemployment rate. But we don't think that we're looking at a spike higher, a double-digit unemployment rate, even under a modest slowdown or, at worst, a very soft recession.
Jordan, I want to call back to what Matt was talking about earlier, this idea of the run-up in the small caps. We know you're looking at them as well. Interesting from Gina Martin-Adams over here at Bloomberg. She is gauging investor sentiment, and according to one gauge, it swung from panic mode in April to what they're now calling approaching manic mode. And you see this rush towards risk assets of late. I'm wondering if you think it's reliable.
Well, if we take a step back, we know that small caps are very cyclical. Our view on the economy, that this is a cold, hot, cool economy, right? We think the economy is going to slow down in the second half. We think it's going to heat up in the first half of 2026 and then cool to a more normalized pace of growth of around 2%. And we know that markets are forward-looking. So if we do buy into that narrative that a little bit of fiscal stimulus, maybe a rate cut here or there will start to buoy growth over the first half of 2026, I think looking at an area like cyclical values, small caps, financials look really interesting in that environment. Again, as we start to price in, or as markets start to price in, that hotter economy in the first half of 2026. And then when you also consider valuations, particularly across small caps relative to large caps, I mean, you're looking at some of the cheapest valuations, relative valuations in small caps relative to large in quite some time. So I think, there is some opportunity, and particularly, again, given that we do expect growth to start to buoy in the first half of 2026.
Jordan, thanks for joining us this morning. That is Jordan Jackson of JPMorgan Asset Management. Now let's get a look at some stocks moving under the hood this hour. Let's say it a third time, Matt. Tesla is slumping. Elon Musk is diving back into politics with the formation of a new U.S. political party. Shareholders don't like it. It's down by more than 6% this morning.
Yeah, it is. I actually have to make a little bit of a surveillance correction here. I earlier talked to the analyst, Jed Dorsheimer from William Blair, and they cut their rating on Tesla to a market perform. I inadvertently said it was a sell and mistakenly said it was a sell, and that's incorrect. So just to clarify that, William Blair has a market perform on those shares. They are down another 6% and change. We're also seeing U.S. Listed shares of Stellantis falling, so Tesla not the only car maker down. 2.6%, though not nearly the same scale. Bank of America says Stellantis is no longer a buy.
This one we've been talking about all morning as well. Core Scientific, think this is fascinating, down almost 21%. After Coreweave announced an all-stock deal worth about $9 billion, you always ask who's the buyer and who is the target. It's pretty clear here that Core Scientific is the target, but the shareholders will only own about 10% of the company. So very clear that they're wanting more. We're going to bring in Anurag Rana a little later.
I don't believe in mergers.
You don't, and
I don't know why people went back to using that phrase here, because there's always a buyer and a seller.
Sure is.
There's no merger of equals since Daimler Chrysler. Coming up, we're going to focus on the deals landscape for private equity firms. The CEO of Hunter Point Capital. That's next in the Wall Street Beat. This is Open Interest.
And And it's time now for the Wall Street Beat. We're going to focus in on the private markets. Last month, Hunter Point Capital agreed to acquire a 16% stake in Equities, an international infrastructure investor and fund manager at a valuation near $2 billion. Since the deal, Equities' portfolio has grown to nearly $16 billion in assets under management. And Hunter Point CEO and co-founder Avi Kalkstein said he sees the partnership fueling global expansion, product innovation. And if you have not noticed, outside of even Hunter Point, there's a lot going on in the world of M&A and asset management. So, Avi, thank you for joining us here. You know, even just this morning, you saw another deal over at BlackRock buying another private capital firm. Your firm is designed to take stakes in more of them. You're heading into infrastructure, and it makes me wonder whether you see a bigger opportunity. The big, beautiful bill could squeeze some of the states more. There's a worry about crowding out in government financing. Is infrastructure a hot space now because of the worries about how much the government might step back?
Well, it's great to be here. There's a lot to unpack. I think infrastructure is a very interesting area for global investors, not only because the government might pare back its investment in the field, but public-private partnerships have been very, very interesting for groups like Equities. And I think investors around the world are pivoting away from private equity to some degree and into areas like private credit and infrastructure. So we've seen a lot of demand as we've been traveling around the world.
A big theme, you know, just a half an hour after the market opened here, IPOs, the lack thereof them coming from the private equity world. How much is this kind of damaging the brand of private equity? You mentioned people are kind of moving away from private equity. How soon do these companies really need to get companies to market via IPO or sales before this becomes a much bigger issue?
I'm not sure it's a big issue. Many private equity firms were not particularly reliant on the IPO market for exits. And as you'll know, if you take a company public and you still retain a large chunk of it, you're not really out of it. So I think the bigger challenge for private equity...
You get to give money back to your LPs. Like, this is the issue, right? Not the IPO pipeline per se, but exits in general aren't there.
Exactly. Let's call that the DPI issue. And I think the challenge today with interest rates high is that financing costs are greater, and we haven't yet found a natural equilibrium for the M&A market for companies. And that looked like when interest rates were dipping that it would find a stasis, but it seems to have been blocked again. So as we look to a period, let's say in the next year when interest rates could drop 25 or 50 basis points, that should reignite that market to some degree.
It's interesting because even just today we're looking at Coreweave trying to make an acquisition. Blackstone, to your point, remains one of the bigger holders even after the IPO. But the benefit to going public is that stock. It's the idea of being able to buy more. Do you find that the M&A markets right now among the portfolio companies that you're operating with are more competitive just because there are strategics coming back into the game right now?
So our market is really focused on alternative investment managers. We make minority stakes in firms, and we do that on a very long-term basis all around the world. So we're hoping to find, if we do a good job, some terrific firms like Equities, like El Caterton, like Pretium, that we think have very, very long duration potential and franchise building opportunity. There is an M&A market that's developed over the past cycle, let's call it, whether it's with BlackRock or others. So the phones start to ring off the hook for firms that are acquirable. Not all of those are acquirable, but certain firms are acquirable. So this is a new trend, I would say, relative to what existed 10 or 15 years ago.
So, Avi, what does Hunter Point offer beyond just the capital? When you call up El Caterton and say, I want to make a deal, why are they happy to bring you on as an investor?
I can talk about El Caterton specifically. They were interested in building a credit business, and we had specific expertise to help them. And so, in fact, they called us. So that's the best scenario for us, where the value added that we bring, the business building capability, the capital formation, the executive coaching and development, our procurement organization, all of those features, I think in some ways are more important than the capital that we bring. So we're being brought in as partners to help build a business and less as financiers.
How much are you getting calls now? You kind of hinted at this, for people calling you saying, the companies that you're invested in, are they ready to be part of a bigger company? You think about the scale that was created through the BlackRock deal, for example, with HPS. Are more people looking to buy more assets in asset management? What does that kind of phone chain look like underneath the surface?
It's a topic that everyone is interested in and considering, whereas, as I said, 10 years or 15 years ago, I don't think anyone would have really considered it. Private equity firms and credit firms didn't necessarily belong together. Whereas now they seem to be thinking about diversification of sources, consolidation of LP relationships, and that's become part of the calculus.
Very cool. All right, really fascinating stuff, and I'm glad you could come in. Hope we can get you back on the show again. Hunter Point Capital CEO and co-founder Avi Kalkstein. Coming up, advertising innovator Mountain enjoying its second month as a public company. We'll check in with Mark Douglas as the shares rise. He's the CEO and founder of that company as well. This is Open Interest. Let's get out of high interest. Look at what's making headlines around the world. Oil is steady after OPEC Plus decided on bigger than expected production increases next month. The decision shows confidence that the market can absorb the extra barrels. It also indicates that risks to crude appear contained, at least in the short term, and it's kind of an olive branch from the Saudis to President Trump as these deals get finalized. Sales at Saks Fifth Avenue and Neiman Marcus fell 16% and 10% respectively as the department stores lost customers and sales to competitors like Bloomingdale's and Nordstrom's. The declining figures highlight the challenges facing Saks Global after it bought Neiman Marcus for $2.7 billion last year. Also, Macy's, thank you very much for the fireworks display this weekend. Camp Mystic, the all-girls summer camp on the banks of the Guadalupe River in Texas, has confirmed the tragic news that 27 children and counselors died in the flash floods that have torn through the area since Friday. The floods caused by intense rainfall swept through parks and summer camps, resulting in at least 82 deaths overall, and that tally continues. The death toll is expected to rise. Let's get the latest now from Bloomberg's Texas Bureau Chief, Julie Fine. She joins us from Dallas. So, Julie, the question that a lot of people are asking is, could officials have done more to alert potential victims, or was the flash flood, was the water just rising too quickly?
Well, I think that's something they're trying to really dissect right now, Matt, but it has been gone through many times in the past 4 days during this tragic time here in the state of Texas. The alerts were out. The National Weather Service went through. The alerts were out. The question is, did they get to who they needed to get to? Now, you're talking about a summer camp where obviously children don't have their cell phones. The question is, was there Wi-Fi? Is there something here called alert fatigue? You know, if you've spent any time in Texas because of flash flooding, because of tornadoes, because of bad weather, you frequently get alerts on your phone. However, we do know in the city where this happened, there were no specific sirens that have been spoken of yet. So obviously there are going to be several reviews to find out exactly what went wrong here. I do want to point out here with the weather, you can be expecting a tornado somewhere. It can go 75 miles in another direction. All of these are very difficult questions that officials will have to break down as families are really dealing now, though, with the search, the loved ones, and accepting what has happened here in the state.
Julie, there's the immediate aftermath where a lot of questions, as you say, are being posed into whether the right precautions were put in place, whether the right alerts were being sent out. But to the point that you're making also is that the weather is inclement in Texas in a lot of ways. How do officials make sure this doesn't happen again?
That's what they're going through right now. They're trying to figure that out. And that is, you know, a lot of people are discussing that and what to do. And I think the hard decisions will really be made later. As somebody that's covered many of these tragedies, what happens at the beginning is it is about the family. It is getting the resources there for the family. And quite frankly, it's also getting the resources to get everybody else out of the city. We're still dealing with bad weather here. So after that is put aside, they will make sure that they will sit down and go through this. I don't know if you remember, but we had a horrible storm here. We had a horrible wind and weather storm here, Uri, and it took legislative action to really make sure that this didn't happen again. Obviously, they're going to have to make some changes in how people are alerted. The question is, how do you do that?
Julie, it seems that we hear these horror stories often from Texas, whether it involves the grid, the energy grid, or climate disasters. Is this being talked about in the state capitol? I mean, what needs to happen in terms of infrastructure investment to make sure that these kinds of tragedies don't reoccur?
Yeah, I mean, this has been talked about in the state capitol for several years. There have been some changes. There have been some changes to the power grid. It has held up very well the past couple of years. This year, the big discussion was over water and infrastructure and what's going to happen to keep up with the population. So, yes, this is a discussion that will happen over and over. It will be interesting to see. The legislature has just ended, but there's a special session coming up at the end of the month if something specifically related to this comes up.
Julie, we thank you for your time this morning. That is Bloomberg's Texas Bureau Chief, Julie Fine, reporting from Dallas. We're going to continue to update you with any developments in this story. Stick with us. This is Open Interest.
Since going public 6 weeks ago, Mountain is up 34%, and they've been busy. The connected TV advertising platform announced a partnership with Zoom Info. It was also added to the Columbia Small Cap Growth Fund, taking the place of Monday.com. Joining us now on set is the CEO and founder of Mountain, Mark Douglas. So, Mark, great to have you here.
Thank you.
I always ask you quickly to just explain the business, because everybody knows your company because of Ryan Reynolds working with you, and you sell ads on connected TV, but what does that exactly mean?
Yeah, I mean, it's very straightforward. What we've done is we've made television, which has been, and I mean specifically in this case, streaming TV, something that's been the domain of really big brands with really big budgets and big agencies, and we've democratized it. We've made it so any size brand who previously might have just been doing digital marketing on Instagram or with Google paid search, that now they can leverage streaming TV to get their next customers. So big TV ads on the big screen in the home, but all very targeted and in order to drive revenue for emerging growth companies.
So you recently went public.
Yeah.
You've been getting some pretty warm receptions from the analyst community. You have a $28 price target over at Tigris, Raymond James at 27, Evercore ISI at 27. You're at 21 right now. What are the expectations from you? What is different now being a publicly traded company versus where you were before?
Well, I think the biggest thing is I personally really recognize that previously we had, 5 to 10, kind of private equity firms and venture capitalists invest in the company, and now we have hundreds of thousands of millions of investors. And I take it very seriously that we're here to make money for the team, for our customers, and for those investors. And I literally wake up every day with that in my mind. And we do that by growing the business, and it makes it easier to grow when it's in a big market, which it is. It's a very, very large market we're operating in. So that's the key thing that's changed for me, is just kind of having all of the individual investors and public equity firms now behind the company and delivering for them.
Your platform makes like David and Goliath stories possible for your clients.
Yeah.
What about for you? can you go after the Goliaths of the advertising industry at Mountain?
Yeah, well, so, one interesting thing is that we've been very focused on small and mid-sized businesses. And the world is kind of the opposite of what most people think. They think, well, what about the biggest customers that you're going after? We've been focused on tens of thousands to, we believe hundreds of thousands and beyond small customers. And if you deliver for them, somehow the big companies see that. They see the efficiency of that, and they start to show up. And we're actually seeing we were seeing a little of that before we went public. We've seen a lot more of that. I was at Cannes Lion recently, which is a big industry trade show in France that was almost exactly a month ago. And it's all of the biggest brands in the world. And me and other people at Mountain, Ryan was there. We had a lot of meetings with them, and there's a lot of exciting things that we see coming from that.
So how does the macro float through to what you're doing right now? Because obviously a lot of anxiety out there. There's a lot of uncertainty around tariffs still, a lot of uncertainty around inflation, jobs. What does this mean? You were just at Cannes. Very fancy. And
it feels a little guilty when you're there. Like, should I really be here right now?
The top of the world, right? The top of the world. But when you're there, are you getting a sense that these big companies are ready to spend top dollar, given how uncertain things are?
I think the way to look at that is in uncertain times, digital marketing. So let me back up. There's brand marketing. That's what, when you think of TV, you think of like the Super Bowl ads and kind of these things that are designed to build these kind of large global brands. But then you have performance marketing, which is the arena we're in. That's the arena, Meta's in, Google is in. That arena of digital marketing where you're driving measurable revenue has a tendency to be recession-proof. Like essentially when times are tough, companies pull back on the discretionary spending and they focus more on the things that they can spend to measure because they don't want to give up their growth. So we actually, when times are tough, we tend to think that it's actually better for Mountain. And you can see that in Google's and Meta's numbers over the years. There's essentially never been a dip. It's just always up and to the right through recessions, through housing crises. So I don't think it's something to worry about for us, but for brand advertising, it can be a bit more of a rough ride.
How does AI change your game? I mean, we've seen it invade all of these industries. How about for you? How can you use it?
Yeah, so it helps to keep leveling the playing field. So the cost of creative continues to come down. We Mountain every aspect of our business in terms of how we operate, and also our products are in some way AI enabled now. I guess we're about 2 years after the big open AI moment. And it's all geared towards leveling the playing field, make us more efficient sales-wise, marketing-wise. If you look at about 2 years ago, about half of our revenue came from inbound lead. That's now 3/4 of our revenue. We haven't hired anyone in sales during that time at all. But we've grown our revenue because we've just become more efficient in terms of how we operate sales and marketing. We've invested heavily in engineering, but we're getting a lot of leverage again from AI tools. And then we're doing the same for our customers. Creative especially, it's really important. Our customers, 96% of Mountain customers have never advertised on TV before, so they don't have TV ads when we meet them. And so we're now leveraging.
Ryan will take care of that. He's pretty good at creative stuff.
Maximum Effort definitely takes care of some of that. But, AI tools for creative is like having its moment right now. And we're right in the middle of that, too.
You could find Open Interest on YouTube as well. Just putting it out there.
100%. Hey, Mark, great having you in. Look forward to catching up with you again soon. Mark Douglas is the CEO and founder of Mountain. Let's switch gears now to, stay in AI.
More
right?
AI stuff. I think this is an amazing story. AI data center space is in high demand, and you have a Bitcoin miner that used to be core crypto and has been switching into the AI world, trying to essentially make a merger happen with Coreweave. Investors don't like it. So both shares of Coreweave and Core Scientific are down after the former company agreed to buy the latter in a roughly $9 billion deal. We're going to now bring in Bloomberg Intelligence senior tech analyst Anurag Rana to join us to digest what exactly is happening here. If you look at Core Scientific shares, almost a 20% decline right now off the heels of this announcement. Why? Are they demanding a much higher premium for what they have?
No, I don't think they're demanding a much higher premium in our view. I mean, I think it's more the method of payment that is probably the big question mark over here for them. Because think about it, Coreweave, if you look at it, just came out as an IPO a few months ago. The IPO price was $40. Stock went down to, somewhere around $35. Now it's close to $160. And they're using an all-stock transaction to buy this particular company. It's very likely that the acquiring, shareholders of the other company, which was, just about a few weeks ago before the rumor came out, trading at $7, $8, $9 or somewhere in that range, and now they're going to, the deal, although it's at $20, maybe they don't like that. They'll end up with, Coreweave shares. But at the end of the day, I mean, from a strategic point of view, this is a good thing for Coreweave, and obviously them paying by stock is also a good deal.
But for Core Scientific, maybe not. I mean, I just can't wrap my head around, Anurag, how a $9 billion offer sinks the shares of a $5 billion company to $4 billion. Like, it just doesn't make, the math doesn't make sense to me. Even if Coreweave shares fall 4%, it doesn't ring true.
No, fair point. But it seems like in this case, the shareholders of Core Scientific are basically saying, you know what, I will basically go out and, cash out the shares today rather than holding Coreweave stock over an extended period of time. That's what's happening.
I want to just follow up on a point that Sonali made in the intro, which is that Coreweave was a crypto miner, right?
Core Scientific was.
And Coreweave as well.
Oh, that's
they were
true.
an Ethereum miner. Okay, so both.
Yes.
And, we were talking to the CEO of Mara Holdings last week as well, which is, a Bitcoin miner, but is now pivoting towards AI. Anurag, are we going to see a ton of this as AI becomes maybe more lucrative than crypto mining?
I mean, it is right now very lucrative. I mean, you could see the demand coming from OpenAI, fueling growth for everybody, wants to train their models. At the end of the day, you are renting equipment, high performance computing, you are renting GPUs from people, and, that demand is very high. So, if I was in that business, I would be pivoting as well. And that's what's happening. Coreweave has a massive backlog right now. In order for them to fulfill that, they need to have an infrastructure. And in this case, they are getting it from this particular acquisition.
Anurag Rana from Bloomberg Intelligence. We appreciate your analysis so very much. Really interesting point there. Maybe investors just want to cash out before the deal. Maybe they don't think that 10% of Coreweave is enough.
Oh, yeah. On the price, it's, I think, absolutely fascinating. But to me, more interesting is that all of these companies that amassed massive compute, right, bought a ton of GPUs and cooled down data centers to run them, are now shifting the use case. And I wonder what that means for crypto. And you anchor our
crypto
coverage.
show tomorrow at noon. Looking forward to that this week. But coming up next, we're going to go back to politics. The Trump administration is looking to finalize trade deals while Elon Musk forms his own political party. We're going to discuss it with political historian Wendy Schiller of Brown University next. This is Bloomberg Open Interest.
We're going to be very busy over the next 72 hours. President Trump's going to be sending letters to some of our trading partners saying that if you don't move things along, then on August 1st, you will boomerang back to your April 2nd tariff level. So I think we're going to see a lot of deals very quickly.
And that was U.S. Treasury Secretary Scott Bessent speaking to CNN last night. For more on the latest on trade negotiations, we're going to head to the White House. Joining us now, Bloomberg Washington correspondent Tyler Kendall. Tyler, there's this perception here that the Treasury Secretary is putting out that there will be a flurry of deals in the next 48 hours. The question is, how substantial will they be to offset any impact of any countries that will go back to that Liberation Day timeline? That August 1st deadline now looms large over the market, does it not?
Right, exactly, Sonali. It is clear that the White House wants to show some sort of forward progress here, but that the situation is incredibly fluid. Now, the Treasury Secretary is saying that we could expect a flurry of details, but likely they'll be light on deals, but they'll likely be light on details when it comes to the actual framework agreements we see. And our analysts at Bloomberg Economics see 3 different scenarios likely playing out in the next coming days. One would be announcements of these agreements. Think what we saw with President Trump posting on Truth Social about Vietnam. He named the tariff rate, but we were light on those details, and it's worth noting that negotiators from the country were actually in Washington over the weekend. The second scenario would be those countries that the White House feels are negotiating in good faith. They're not going to announce the finalized tariff rates yet, but they're going to give them likely this 3-week extension, as we hear the Treasury Secretary saying that these letters are going to go out, but the levies aren't going to actually be enacted until August 1st. And then the last bucket are going to be those countries that are going to see their tariff rates essentially dictated to them. These likely are going to be those smaller countries that don't do a lot of trade with the United States and are facing that 10% baseline tariff already, and that's likely not going to change. But Matt and Sonali, I bring that up because the White House is already pitching those as potential deals that they're going to tout, since those are going to be the likely rates that they're going to have to pay if they want to do business with the U.S.
All right, Tyler, thanks very much for the wrap. Tyler Kendall there joining us from the White House. We do expect to hear some announcements on trade deals today, and the president has said around noon is when he would likely be sending out the first batch of letters. Tariffs are not the only trending topic in Washington, though. Tesla CEO Elon Musk tweeting over the weekend that he will be starting a third political party, the America Party. President Trump reacting to the news yesterday.
It's always been a two-party system, and I think starting a third party just adds to confusion. It really seems to have been developed for two parties. Third parties have never worked, so he can have fun with it, but I think it's ridiculous.
Joining us to unpack all the turmoil in Washington is Wendy Schiller. She's the director of the Taubman Center for American Politics and Policy at Brown University. And Wendy, I think the history is fascinating. A third party in recent years hasn't made headway in terms of taking power, but has definitely helped to determine the outcome of certain elections. Look at RFK Jr. joining up with President Trump, or Ross Perot moving the needle on Clinton Bush. How do you see it?
Well, good morning, Matt and Sonali. The third party effect has been profound across the history of elections, mostly in setting the agenda for the winning administration. So you don't have to win the actual outcome of the presidential election, or a governor's election for that matter, but you put an issue on the table and voters respond to the issue. And when voters cast a vote for a third-party candidate, they frequently understand that person probably can't win the Electoral College or can't win the race, but they're making a statement, and they look for that party. They get enthusiastic about making that statement. Ross Perot put deficits on the agenda in the 1992 presidential election. Got almost 19% of the vote. Some say he cost Bush Sr. the presidency. But Clinton addressed the deficit, whether he was going to do it or not, because it was a resonant issue among voters. And Elon Musk has an opportunity to say that government doesn't work for you, that government is inefficient, and that he wants to see changes in government. And that could catch fire if he can manage to do the bureaucratic things that make a party succeed in terms of a third party, like getting on the ballot.
Professor Schiller, one question I have is how convincing could he be on certain policies ahead of the midterms? Because ultimately, near term, this is where it matters most, doesn't it?
Yeah, I mean, I think, the midterms, I think you can argue maybe they started at the end of Hakeem Jeffries' speech on the floor, his record-setting speech the other day. All right, that's it. Midterms are starting. But I don't know that Musk will go the Democratic way. The question is, can you actually get somebody? Ranked choice voting helps here. You can have multiple people on the ballots, but the Republicans have actually been trying to fight or roll back ranked choice voting in a lot of states. So that's an obstacle for Musk. But you need signatures to get people on the ballot for a third party. And if you're starting a brand new one, the obstacles are very high. Political parties, as President Trump said, we've had two. They're dominant, they're majority, and they control access to the ballot and voting in the states. So getting on the ballot and getting up and running is purposely set to be hard by the incumbent two major parties.
President Trump, putting the fight with Elon Musk aside, Wendy, looks pretty powerful right now. I mean, he managed to push through $4.5 trillion in tax cuts while only cutting spending by $1.2 trillion. Republicans who had, I guess, pretended to be deficit hawks, put their reservations aside and helped him to pass that bill. What does he do with this power and a market at all-time highs? What does he do with this power going forward into the rest of the year?
Well, Matt, that's the big question mark for a lot of people. He's clearly turning his attention to tariff deals now. He wants to be the deal maker. He also wants to see some sort of peace agreement, I think, in terms of Israel and Hamas and Gaza and Ukraine. He wants to be powerful on the world stage. It looks like he's much more interested in that than he was maybe a couple of months ago. But the power to pass a law when you have a trifecta, you control all the branches of government, isn't, that surprising that he would get, tax cuts passed that are sustaining tax cuts that voters were already used to. The question mark is, what do states have to do to keep up with the cuts that they're proposing, even if the cuts don't go into effect till the end of 26? States will have to balance the budget, and they're going to make cuts in preparation of that. That may hurt the GOP at the state level, governor's races, state legislative races. And the question is, does he care? Is he attached at all to the fate of the Republican Party other than the fate of Donald Trump?
Professor Schiller, when we look back at this year, what will President Trump really be judged on in terms of policy? Will it be these trade deals? Will it be the big, beautiful bill? Will it be the deregulation we haven't seen yet?
Yeah, I mean, presidential scholars usually do batting averages. What percentage of the president's policies or even bills they send up to the Hill pass? And certainly President Trump is, batting a very high batting average between the use of executive powers, Supreme Court upholding a lot of the use of those executive powers, and getting this tax bill through. The question is, how do you reverse some of the numbers that we're seeing in the polling, right? He's under, over-under on approval rating, which means more people disapprove of him than approve, and the direction of the country and the economy all are in negative numbers for President Trump. And that's the big challenge going into the midterms. What happens if the president wants something else from Congress? Maybe he won't ask for anything. Maybe he just uses executive power. But sooner or later, if he's still super negative and he's dragging down all the other Republicans, you'll start to see more pushback against the president. So going foreign, thinking about unilateral trade negotiations, thinking about military agreements, that's the best bet for the Trump administration because that's where they have probably the most free reign of any issue area.
All right, Wendy, great to get some time with you. Really appreciate the historical context that you give us. Wendy Schiller there of Brown University. Coming up, by the way, later today on taxes and trade, we talked to Representative Kathy Castor, a Florida Democrat. That interview at 2 p.m. New York time on balance of power. This is Bloomberg. Get you a look at what's ahead this week. The U.S. is preparing to send letters to 12 to 15 countries setting out new tariff levels. That starts at noon today, so just about an hour's time from now. Also, President Trump is set to meet Israeli Prime Minister Benjamin Netanyahu at the White House. And on Wednesday, the Fed publishes the minutes of its last meeting. Then we have Delta.
Earnings, yeah. Delta Airlines and packaged food company ConAgra report earnings on Thursday. Let's get a look at these markets, though, Matt, before we let everybody go, because it's a down day. We are retreating from those record highs. We're watching a slight uptick in that 10-year yield. It's actually been accelerating throughout the morning. Now 3 basis points higher. Markets absorbing all that geopolitical data.
But still non-threatening, right?
Yeah.
At 437, 438. I'm thinking already ahead to bank earnings, and it's still another a week and a day until we get. Is it the 15th?
Yeah, pretty much. It's the 15th.
Yeah.
Yes. But we'll get more of a read on corporate health as well as those U.S. consumers. But tomorrow, Matt, we got another day ahead of us to absorb these.
Another day, another
tariffs.
dollar for you and me, Sonali. Emily Rowland joins us from Manulife. John Hancock Investments, as well as Hamilton Lane co-CEO Eric Hirsch and real estate developer Ari Rastger, who's been called the Oracle of Austin.